Hey, what's up you all? Welcome back to the channel. In this video, I'll be covering why the housing market is cooling down, why the real estate is going downwards that we are seeing, which is very visible at the moment. Home supply is up for the first time in 3 years after the pandemic. Based on the report that we see from Redfin, the home supply is staying on the market is one of the bigger concern. The Fed rate hikes is not letting us settle down, and the stock market is down as well. And all in all, people are talking about we are all in recession. So I'll be covering pretty detailed analysis, and all the details will be explained in this particular video, so stay tuned and watch the full video. In addition, I'll be covering why Florida could be one of the states that will be hit the most during this season of downturn in real estate market. You might be watching Grant Cardone, who is one of the bigger buyer in Florida, Fort Lauderdale, and many other markets as well as Mid-Cabin. However, right now you want to also learn why everyone is talking about housing market is going down. So stay tuned, watch the full video, because I'll be sharing data month over month decline, not only in housing sale price, but the way it is declining in terms of the market in general, state by state. And I'll be also talking about states as to what and as to which states will be getting hammered the most. So watch the full video. If you already know that the high mortgage rates are keeping home buyers on the sidelines, leading to declined home sales, and it is building up the supply, and which is why we are seeing a ton of homes into the market and they are not selling as fast as they used to be. If you already did not know what is the rates right now for the mortgage rates, take a look right here. For 30 years jumbo rate, we are looking at 5.5%. which is pretty huge because it used to be 2.25%. The same way, 30 years fixed rate for confirming loan is 6.625, which was around 2.4%. So it doubled up. What that means is someone who was eligible to buy $500,000 home is now only able to buy $250,000. Why? Because their income did not rise that much to get covered for the home mortgage that is going skyrocketing at the moment. Country's economic woes have already been cooling down the housing market, and they are likely to continue dampening demand. Based on what Redfin's chief economist mentioned, the Fed has signaled that it may increase the interest rates further to combat stubbornly the high inflation. We have already seen what happened when Fed increased the rates last time. Fed raises the rates by 3/4 in September, which means the Federal Reserve benchmark interest rates by another 3/4 of a percent point. They also indicated that it will keep hiking the rate above the current level, which is pretty concerning. And this is the report that we have seen in September, late September. So we will be seeing what Fed will be doing in October, November, and for the rest of the 2022, which can bring us in a severe situation in 2023, especially for the real estate market, because as the home supply stays onto the market, the rates will start going up and the market will have a ton of homes. That means the sellers will be forced to sell their homes at lower price, which will in effect that will be turned into buyer's market instead of the seller's market that we have been experiencing for a long period of time. The central bank has been looking into bringing down inflation, which is running near its highest level since 1980. Fed officials signal that the intention of continuing to hike until the funds level hit a terminal rate at the point of 4.6% in 2023. That implies quarter point rate rise next year, but they are not going to decrease the rates that are already hiked, which is again concerning for the housing market. The Fed, if you decide to sell, do it quickly, because the demand potentially falls further and the price carefully, because the home may stay on the market, because this is not the time to test the waters. You will do more harm than good if you are overpricing your home that is on the market right now. Anyway, winter is not the best time. Spring and summer is the better time for the home sellers, and also the home buyers are more motivated during the summer season and the spring season before the new school year starts. You have to do the price reduction if it is you are putting it into the market above the market rate, so do it accordingly. The market is a mixed bag for buyers at the moment, because they are seeing the high monthly housing payment than the earlier. Why? Because we are seeing higher interest rates in terms of the home mortgage that I already shared and explained to you. Earlier this year, due to comparatively high mortgage rates, they are facing less and less competition for the homes, which often allows them to make less risky offers that include protection like inspection, appraisal contingencies, and also the home mortgage approval from the bank contingencies. If you take a look on my screen, the market summary suggests that for June 2022, the month-over-month decline in median sale price was negative 0.40%. Year over year, we did pretty well. We are up 11.2%. However, I'm concerned about this month over month rate, because 0.4% month over month is pretty high. Median sale price right now in the United States is $428,400, which is decreased by 0.4%, as you can see. Not only that, homes sold, which is seasonally adjusted price, is $524,200, which is a negative of 4.3%. Pending sales and seasonally adjusted homes are also negative 1.5%. All in all, what I'm trying to say is the home prices are going down. At the same time, they're staying on the market for a longer period of time. I just wanted to ask you if you can hit the like button and subscribe to the channel. That will be a big help and a big motivation. If you want me to cover any other videos in terms of housing market and or any finance videos, write down in the comment section below. But at the least, hit the like button and subscribe to the channel. Another thing that I wanted to also mention is right now one of the bigger concern is the competition into the market. The prices have been going increasingly into the lower side. So if you take a look here, the chart on my screen that we saw in 2021, the month of May, June, and July, it was ramping up. But we quickly got back down in 2022, and the decline continues by 11.2%, provided this data by Redfin. One more thing that I wanted to also share with you is how it is impacting bigger market in general in Redfin metro area. Take a look at my screen and you should be able to see that Albany month over month is going higher. However, if you take a look, the Anaheim, California, in California state, where median home sales price are 1 million and above, we are seeing close to 4% decline, followed by Austin, Texas, which is one of the bigger and hotter market in general, with the median sale price of $536,000. The market impact at the moment is more towards the West Coast in Silicon Valley, because the technology stocks, technology companies are going through worst period of time in last 5 years. Since they got bigger hit, the homes on the West Coasts are not selling as fast as that they used to be. Also, remote work for people created another opportunity, so they can work from anywhere they want and they don't necessarily have to live into the higher cost areas as they are living at the moment. Take a look in Idaho, we saw 4.5% decline, and we once again saw a decline in Florida as well. Why Florida is not being hit at the moment? If you take a look at Fort Lauderdale, it went still up month over month in June, with the median sale price of $410,000, because the way the businesses are designed for Florida, they have not gotten such an impact, and they're up 20.70%, as you can see, in last 1 year. And also last month in June, based on this data, Fort Lauderdale was up 2.6%. However, after the technology, once it starts spreading, once we start seeing that the interest rates are going higher and higher, people won't be able to book their home mortgage at lower rates anymore if they have not locked it. It is going to impact the home price, market price, mortgage price, everything, all of the above, which is going to create more concerns. As you can see in Maryland, Fed rate, we are seeing close to 2% down month over month, which is pretty big, where it went up 9% in last 12 months, and it just declined by 2%, which is once again a pretty big thing. In South Carolina, we also started seeing 4.5% decline month over month. It is looking pretty healthy in Connecticut, Texas, some parts of area, as you can see, Houston, Texas, Indianapolis, so on and so forth. But overall, the numbers are sluggish, as you can see, because it went up by 19% just in last 1 year. So the home rate supply is one of the bigger thing. Also, the increasing Fed rates that are raising rates by another 3/4 of a point, and then there are more talks about it is going to go higher, is causing more and more concerns into the stock market. Overall, housing market is starting to slow down after months of record high volume, with the home prices and surging mortgage interest rates and a lack of inventory that has forced buyers into the bidding wars back in the days. This slowdown, which would have eventually bring the home prices down, could also go into a completely opposite direction, one that economists mentioned, a market crash. More importantly, the real estate market crash or housing market crash that can create bigger concerns. We are not expecting the repetition of 2008, but this thing wouldn't look really decent either. In the first quarter of 2022, the home prices surged by 16% on an average across the country, according to Moody's analysis or analytics. Now, but the prices have increased everywhere across the nation, and the changes have not been same in every state. If you take a look on my screen right now from Newsweek, we are seeing the states that will be getting the most impact. 11 states, where Arizona is on number 1, second is Florida. Third one is Georgia, followed by Hawaii, Idaho, Nevada, North Carolina, South Carolina, Utah, Tennessee, and Washington, which is powered by severe housing shortage fueled by lingering consequences as to what the 2008 financial crisis and the pandemic, and the migration of people are moving from West Coast and from New York to these states have caused surge into the price point for the market. Now, if people are not willing to pay the price, that means the seller will be forced to lower down their selling price, which is when it'll become buyer's market. If you like this video, hit the like button, subscribe to the channel, and I'll make sure that I build more and more videos and I serve you with the content that you're looking for. Thanks for watching, and I'll see you in the next video.